Mr. Sudip Bandyopadhyay, Group Chairman at Inditrade Capital. Sir, thank you for joining us here on First Take. Always a pleasure speaking to you. Now, we are very close to record high levels as far as Nifty goes, just about 120 points shy of it. It's just a matter of time before we surpass it. Has this pre-election rally, which we had been talking about, has that finally begun, sir?
Well, I think so. I think, there are confluence of positive factors. Of course, we had a budget which was pretty good. There was hardly anything, which worries the market. Populism naturally in an election year, but that didn't come. And that was a sweet surprise for the market. Fiscal consolidation glide path was outlined. The net borrowings are lower in the next fiscal compared to the current fiscal. Now, all this was music to the ears of the market. And, after a bit of, recovery, because before a budget, a lot of unrealistic expectations starts cropping up, tax relief, this and that. Of course, in an interim budget, that's not and should not be there. And that didn't come. But markets started understanding the budget and reacting positively very soon. Also, I think there have been certain developments on the oil and gas front, which are extremely positive for India, and all these tie-ups, which some of these oil marketing companies and Government of India has facilitated, which I think is helping crude prices as far as Indian market is concerned. Also, globally, the oil prices hovering around $80 per barrel of Brent is significantly positive for Indian economy and Indian fiscal. So all this does augur well. Private capex hasn't really picked up, but public spending, which is a government capex, central government capex, has been, there has been a hike of 11.1%, which is significant. And I think that also excites the market and multiple sectors of the economy. So overall, I think things are positive. Corporate results for Q3 have been a mixed bag, I would say. There are a lot of positives, a lot of green shoots, but there are certain negatives as well. But by and large, I would say they are what the market was expecting. And I think market has taken the Q3 results in their stride. And looking at the future, looking at the new capital expenditure by the government, a lot of excitement on the potential of interest rates coming down and benefiting certain sectors in a disproportionate manner in the near future. May not happen in this policy, but in the near future. I think all that is keeping the market excited.
All right, and Mr. Bandyopadhyay, when do you expect the first rate cut? Will we wait to take cues from Fed? I mean, the expectation there is that they'll wait till maybe June of this year for the first rate cut. Do you think RBI will also, take cues from there, or maybe we diverge?
Well, if you ask me fiscally, I think it will be better for RBI to wait till the signal comes from Fed, because end of the day, I think US market is the mother market. Whatever we may choose to say or ignore, the fact remains that it is the largest market, and it will have a disproportionate influence on every market. Now, if India starts cutting rates while US is holding, I think it will create some challenges for the currency as well as debt investment into Indian markets. So ideally, I would think that RBI should hold cutting of rates, but RBI will also very closely monitor India's inflation levels, the expectations which are building in the market, and take a calibrated call is what I would like to mention here. So yes, they should probably wait, but final call will depend on RBI's view on inflation, likelihood of inflation, and expectations.
All right, and moving on, the primary market is of course buzzing today. We have 3 main board IPOs that have opened for subscription, including Rashi Peripherals, Jana Small Finance Bank, Capital Small Finance Bank. Any of these on your radar, sir?
Well, I like the small finance banks. I mean, a lot of market participants may or may not agree to that, but I like small finance banks. It's not that you will make immediately large gains on listing and you will make a multi-bagger return immediately. But from a long-term point of view, I do like some of these well-run small finance bank. Capital Finance Bank has been the first small finance bank to start operations, small niche bank, and doing well. As far as Jana is concerned, it's pretty large book. The asset quality vis-a-vis other, some of the peers may not be that pristine, but by and large, I think they have also done a good job. So both can be looked at from a long-term investor's point of view. The valuation is not unrealistic. So yes, one can look at these IPOs.
Good morning, Mr. Bandyopadhyay. And there is another IPO which closes today, which opened on the 5th of this month. APJ Surendra Park Hotels IPO. On the very first day, it was oversubscribed over around 2.5%. Today, as we report, it is over 6% oversubscribed. Now, if we look at the hotel industry, every stock in the space has given huge returns over the last 1 year. East India Hotels as much as 113% up. Chalet Hotels 122% up. Even East India Hotels almost 60% up. Is it a good stock to get into at the IPO, or do you suggest that on the first listing people should get into it?
No, it's a good stock to get in the IPO. There's absolutely no doubt in my mind. You outlined some of the factors, which is the hotel industry is witnessing a secular positive movement. And we know travel tourism is doing great and expected to continue doing very well in the near future. Park is an established brand for decades, and they have built a chain of hotels which are doing pretty well. The valuation, I think I like the most. I think it's attractively valued. Vis-a-vis some of the listed peers, I think it's very attractively priced. So yes, there's absolutely no harm in applying and trying to get in the IPO itself. My belief is that the listing and post-listing, the prices will move up significantly. Let's wait and watch.
All right, and a lot of new age tech companies, they are making a comeback. PB Fintech Delivery turned profitable in Q3. Meanwhile, Nykaa, which reported its numbers yesterday, the profits doubled there. Anything looking attractive in this space, sir?
Well, I have been a fan of Delivery and Nykaa for quite some time. I think these are, while these are new age companies, the new age part is only the delivery of service. These are age-old businesses. Delivery does logistics. Now, I think for thousands of years, people have been moving goods from one part of the country or the world to the another. So they are just trying to streamline the logistics and the delivery mechanism. So the business per se was never in doubt, as opposed to some of the other new age fintechs where business model itself was uncertain. So Delivery getting their act together was what I think we were all waiting for. If they do get their act together, I think it's going to be a fantastic company and a long-term hold. For Nykaa, I think I would say the same thing. Globally, look at LVMH. That's the biggest company, and the owner is the richest person in the world. So the fashion, fast fashion, as well as beauty does sell well, and globally it has been doing well for decades. So there is absolutely no reason why Nykaa should not do well. Eventually, they have to get their act together, and which again, like Delivery, they are probably getting their act together now. So again, I have no doubts as far as Nykaa's future, and from a long-term investor point of view, I think it's a good buy at even current level, both Delivery as well as Nykaa.
All right, but one new age tech company that's not doing so well is of course Paytm. I mean, if you look at the day-to-day activity, the stock is up 9% this morning. It was up about 3%. In Tuesday's trade as well, has recovered 11% from the lowest levels. Mr. Bandyopadhyay, has the stock bottomed out?
Well, it's very difficult to say, Suyash, because when these kind of regulatory action gets taken, whether that will get reversed or that's modified in some manner or the other, I think it's completely in the realm of speculation. So I would prefer to wait and watch, see where things settle. It's not so easy, to resurrect after this kind of a catastrophe. That's what I would call it. I mean, I'm not getting into the merits or demerits of the action or what should or should not have been done. But the fact is something has happened, and that has led to a humongous amount of capital erosion as far as the Paytm is concerned. And the loss of confidence, loss of customers, pretty much real. So to reverse this and resurrect the business, I think it will take ages, if at all it's possible. So I would refrain from venturing into this territory.
And if there is a doomsday scenario where the license of the payments bank is revoked, what sort of a value, I mean, what will Paytm really have after that?
Well, I have been reading this, but what is there? I mean, to revoke any further? I mean, the business has been stopped from 29th February. They can't do anything. So, even if they keep holding the license, I mean, what is the way out? Where do they go from here? I don't know. And you're absolutely right. If that does happen, or even now, I mean, I don't really understand what is the value of the business, how to value it. Honestly, I have no idea how to value this business at this stage.
All right, and are you concerned about a further crackdown in this fintech space?
Well, I think it's been a little unfortunate. Fintechs have been at the receiving end of the regulatory, wrath. Well, it's very difficult to speculate about whether there'll be further crackdowns or not. But the reality remains that this is a new area. Nurturing the area for some time probably was warranted for the growth of the sector. There is absolutely no doubt that if you have to cater to the masses, some amount of technology is definitely required. We have been in banking for, India post-independence, we have been there for 70 years into banking and multiple other things, but we haven't really covered the unbanked people. We haven't taken banking to the masses. I think the fintechs did that, and we're trying to do that in a more effective way. Of course, they need regulation, they need guidance, they need to be disciplined, but they need to be encouraged also. That's what I would feel.
Right, that's a view coming in from Mr. Sudip Bandyopadhyay. Sir, always great insights from you. Thank you for joining us here on News 9.